Hi, good morning everybody. Welcome to today's Solihull Chamber of Commerce webinar on Brexit and the impact on Solihull businesses. I'm Lillian Ellicott, head of Solihull Chamber of Commerce. I'm here to just give a quick welcome before handing over to our speakers. We've got quite a packed agenda, so I'm going to keep it fairly brief. Just going to talk you through the running order of today. We are very kindly joined by Councillor Ian Courts, leader of Solihull Council. So once I'm finished, I'm going to hand over to Ian, who's going to just give us a brief update on Brexit and Solihull in general. After that, we are going straight into our panel of speakers. We've got 4 speakers lined up on various topics related to Brexit. First up, Dan Clark from our internal policy team at the Chamber is doing a welcome and a quick overview of the Brexit trade deal, what has actually been agreed, sort of the highlights of the deal. Then we will hear from Rob Pettigrew, who's director at Thursfield here in Solihull. He's going to be talking about the impact of Brexit on importing and exporting. And then after that, we will hear from Jill Yates, who's head of VAT at Prime Accountants, another local firm, and also Solihull patrons. And she's going to give us an overview of the Brexit implications to VAT. And then lastly, we'll hear from Dave Harris, our documentation business manager at the Greater Birmingham Chamber, who has been working non-stop since the Brexit trade deal came into place at the start of January, making sure our members and also non-members are up to speed when they're trading internationally, know what they are doing. And he's going to be talking about carnets and temporary movement of goods to the EU. After that, we will have around 20 minutes for Q&A. So if you do have any questions, please put them in the Q&A feature at the bottom. If you have any technical issues, please put them in the chat and we'll do our best to resolve them. We've got about an hour, so we should aim to wrap up about midday. If you have any questions that our panel can't answer, we will do our best to take them away and get answers for you, but hopefully we can cover a lot of your questions. Before I hand over to Ian, Councillor Ian Courts, just wanted to make you aware that there is a lot of other Brexit support available. So we've got our website, greaterbirminghamchamber.com/Brexit. We'll take you to our support hub, where you can find further advice. You can watch back webinars like this. So if your questions aren't answered, but you know that some other speakers have covered them, do watch those back. There's Q&As with experts as well, and links to some of our international chambers. We've got a transatlantic chamber and a Commonwealth chamber as well. So if you are interested in finding out more about international trade, do have a look on our website. And if after today you still have questions, please join us for a more extensive Brexit Clinic next week. Topics that will be covered are delivering services in the EU and VAT, once again, moving goods between the UK and the EU, but also business travel to the EU. So if you can make it, that's next week, another session on Brexit. Or why not try some of our other sessions? We've got virtual speed networking, our Pro Solihull networking, and also next week, our virtual awards for our Sutton, Lichfield, Tamworth and Cannock Chase divisions. So lots going on. But for now, let's focus on the topic we're all here for, Brexit. So without further ado, I'm going to hand over now to Councillor Ian Courts. So thank you all very much for joining, and I hope this event is useful. Ian, over to you.
Thank you very much, Lillian. I mean, normally when I'm at seminars, I point to, ask people to put their hands up and say, well, how many here are from Solihull? And, maybe ask a question or two. It's a bit more difficult in this world we're at now because you never quite know where people are coming from. But I'm leader of Solihull Council. I also hold the economic portfolio for Solihull. I'm a member of the West Midlands Combined Authority, and there I have a portfolio for environment, energy, and indeed HS2. So I have a regional commitment as well. Now, Solihull obviously is home to many international businesses, and over the years we have seen lots of investment from overseas companies. And I think generally I'd like to say it's, I would say this, wouldn't I, but it's recognised as a great place to live and work. And even at the height of this terrible pandemic, we are still seeing continued interest from investors to make investments here. We know as a council we've got to do what we can, do our best to support businesses over the coming months. And, you know, we've got to have our minds on future economic recovery and a way out of this COVID pandemic in the future. And there will be a way out, but tricky and difficult though it is, there'll be many local opportunities for business. One of the things I keep saying is, you know, make locally, buy locally, sell locally. It's an important issue. However, we do have a trade deal now, and really accessing the new opportunities that this trade deal represents is really important. We've got a range of expert speakers here to help you with that. There is, of course, a wide range of support available. I mean, there's a certain amount we can impart today, but you know, part of the exercise today is to point you in the right direction. And the Greater Birmingham Solihull Growth Hub, the LEP Growth Hub, is an extremely important place to be looking, as well as the Chamber of Commerce's Brexit toolkit. Now, we want all businesses of all sizes to access support available, and indeed, especially those who are not currently exporting, but which have export potential and who may have suppliers, for instance, across the EU. Now, I know we have a wealth of wonderful companies. Well, in the borough, and during the pandemic, over the last 12 months, I've made a point of regularly having dialogues with them. Now, the Growth Hub website offers checklists by sector, and also, obviously, we're doing a range of online webinars. I mean, all sorts of subjects, business travel to intellectual property. It's all about trying to help businesses prepare for the transition. There are grants available for businesses who need to complete the dreaded customs declarations, and this is under the government's custom grant scheme. So again, Growth Hub and expert advisors can help on this. We've got opportunities coming up, for instance, for new markets, Commonwealth Games, hopefully coming up. Obviously, there'll be opportunities involved with that. There's also one thing I'd like to encourage businesses to do, and that is to promote their staff. It's a practical point on the EU settlement scheme. We do need employers to raise awareness of this, because if there's any EU nationals in their workforce who plan to remain in the UK after June, they need to have applied by the end of June. So that's a very important thing there. So there's opportunities for workforce development. They've got the supplier skills program offered through the skills and apprenticeship hub of the GBS LEP. Can offer support and funding. As a local authority, we have placed tremendous importance on having a robust economic recovery plan. I did a webinar on this many months ago now, and hoping we're out of it by this time. So, you know, we need to do what we can to ensure that our region, our companies have the resilience and opportunities to come back, to fight back as a region and keep Solihull and our area at the forefront of investment and interest for investors. And we, you know, my thanks to the Chamber of Commerce, for instance, for launching this webinar and for the work that they do, because we know as a council we have to work in partnership with our colleagues. So thank you for organising this webinar. I want us to get on to hear from our other expert speakers today, but just a final reminder, if you need business advice and support, please, as far as Solihull Council is concerned, contact our business investment team. And there is an email address, but best look at the Solihull for Success website. Now, Lillian, I'm going to hand back to you for our next speaker.
Lovely, thank you, Ian. And again, thank you for joining us today. We really appreciate it. If you have any questions on what Councillor Court's just shared, do feel free to use the Q&A. And I'd now like to hand over to Dan Clark from our policy team to run through the Brexit trade deal.
Morning, everyone. So I just wanted to give just a brief overview, really, of what's in the EU-UK trade agreement, and really just to touch upon some of the implications that would have happened regardless of whether a deal was in place between the UK and the EU. So just to start off with a summary of sort of what's in the agreement. As you may have heard, the UK and EU have negotiated a free trade deal that removes tariffs and quotas on all imports and exports between the two countries. But it's really important just to state that if you're importing and exporting goods via the EU and UK, you are going to have to meet rules of origin requirements if you want the goods to qualify for these zero tariff, zero quota agreement. Basically, rules of origin requirements are used by customs authorities to classify where a good has come from in international trade. So basically, you can determine the origin of the goods based on where the products or the materials used in their production come from. Now, their purpose is basically to ensure that only UK and EU companies really benefit from this trade agreement, and that other countries don't sort of use the UK or the EU as a backdoor into each other's market. So, for instance, if you were importing goods into the UK from, say, the USA, and you were doing very little activity or processing to the goods, changing them, and then you were sending them straight on to the EU, it's to stop you from passing it off basically as UK goods, really. So basically to ensure that only UK and EU goods qualify for the zero tariffs. So for companies that have global supply chains that that import goods from around the world, this will be an issue really, because once you say you're importing goods from the UK in from Taiwan, and then previously you would have exported them straight onto an EU country such as Germany, you'll now have to pay the if you're doing very minimal changes to the goods or in the processing activity, you're going to have to now pay import duty will be due on the goods when they're imported via Germany. In terms of other stuff in the agreement, both sides have agreed mutual recognition of trusted trader schemes. Now, this is, you might know, as authorized economic operator programs. So basically, if you're a business that's got AEO status, you can benefit from faster customs clearances and basically, less checks via your goods. So both sides have agreed to mutually, to recognise each other's trusted trader schemes. Something else that's included in the deal is provisions around visa-free short-term business trips of up to 90 days in any 180-day period for businesses. If you're sending personnel over to Europe, but this is really important. This is only for a limited set of of permitted activities. So, for instance, research, training, commercial transactions, after-sales services, or if you're sending people over for trade fairs and exhibitions. So it's really important that you remember that. And if you're going, you're traveling to an EU country from now on, you check the entry requirements for each country that you're visiting, because this will differ between countries. It's not something that's standard across the EU. And also just wanted to mention as well that there are sort of limited provisions in the agreement around mutual recognition of product standards. So there are some, some measures in there that will simplify conformity assessments. So on a number of different product areas, such as chemical products, motor vehicles, organic products, or wine. But generally, there's no mutual recognition in the agreement, which will lead to additional paperwork and additional costs for businesses, really. So I just wanted to talk about really what are sort of the implications of the general implications for businesses at the end of the transition period now. As I said, on product standards, UK products that are exported to the EU, they'll now need to demonstrate that they conform to EU standards. So you'll need to get authorization from a UK regulator if you're placing goods on the UK market, and you'll have to receive authorization from an EU regulator if you want to place EU products on the EU market. So this will, as I said, lead to more additional costs of businesses and more paperwork involved with that. In terms of customs, because the UK has exited the customs union, this inevitably leads to new customs procedures. You're going to have to declare your goods on imports and exports when you're bringing them in to the UK as well. And there'll may also be additional licenses that you need for the goods, depending on what goods they are, and maybe certificates as well if you're bringing, products of animal origin, that sort of stuff. And there will be more additional border checks as well. Just want to touch upon VAT briefly, because I know one of a later speaker will cover this, but basically just, the UK is now outside the EU VAT area. VAT will now be due on all goods movements that are imports or exports. So the UK government, to try and help businesses in terms of cash flow, they've introduced postponed VAT accounting, which is a deferral scheme to help businesses. And I also just wanted to mention Northern Ireland specifically. Northern Ireland's a special case. There are special trading arrangements for Northern Ireland because the UK and the EU wanted to avoid hard border between Northern Ireland and the Republic of Ireland. Basically, Northern Ireland has stayed within EU rules and regulations for goods. So if you businesses bringing goods into Northern Ireland from Great Britain or outside the EU, you will need to make customs declarations on the goods, and you might potentially have to pay tariffs. UK businesses can avoid this by you can sign up for the UK Trader scheme, which you'll need authorization for. But basically you declaring that your goods are not at risk of going into Northern Ireland and then straight into basically the EU market without paying the relevant tariffs. And in terms of services, there's very little in the trade deal in terms of provisions around services. So again, if you're a UK service provider and you're going out to deliver work in the EU, you might require a visa or a work permit now to undertake that activity. And again, the rules and regulations will differ between each EU member state. So again, you really need to look at which EU country you're visiting, and the specific entry requirements. This will differ from state to state. In terms of financial services, there's not really, this isn't covered within the trade agreement really. In terms of determining the level of access that financial service providers will have in future to the EU market, that will be decided in due course by the EU granting what's called an equivalency assessment. So it will look at the UK's regulations in a number of areas and will determine the level of market access for UK financial services providers. And another key point from the deal was there was no mutual recognition of professional qualifications. So if you're a professional and you want to carry out, work within the EU, you'll now need to get your qualifications recognised in each EU member state that you wish to practice in, which again will, cause more barriers for many businesses that want to carry out work in the EU. In terms of immigration, as you will know, free movement no longer applies between the UK and the EU. The UK has implemented a new points-based immigration system that will apply to EU nationals now, and EU member states rules will apply to UK citizens. So if you're a UK company and you want to continue to bring people in from the EU to work for your company, you will need to become a licensed sponsor, which you can apply for authorization via the Home Office. Now, the UK, there's been some temporary easements introduced to sort of help businesses with the new arrangements. So in terms of data protection, so if you're a company in the UK and you receive data from the EU, basically there's a 4-month transition period, which could go up to 6, where you'll be able to continue, EU companies will be able to continue transferring personal data from the EU to the UK. Until basically this is until the EU makes an adequacy decision. So an adequacy decision is basically where the EU is saying we recognise UK data protection rules and that we're allowed to, the continuation of data transfers to take place. Another temporary easement that's been introduced by the UK government is around customs declarations and tariffs. So between the 1st of January 2021 and the 30th of June, UK traders will have up to 6 months to submit full customs declaration information and pay any necessary tariffs on EU imports. But for certain goods, such as control goods, you'll have to comply with the new rules straight away. There's also suppliers' declarations of origin. So between the 1st of January and the 31st of December 2021, for UK and EU businesses, will not need suppliers' declarations in place when goods are exported. But they, as I say, must be confident that the goods do meet the preferential rules of origin, and you may be asked retrospectively to provide a suppliers' declaration after this date. And in terms of product markings, the UK government has introduced a new UK CE marking for manufactured goods. Now, this came into effect on the 1st of January, but however, to allow businesses more time to adjust to the new arrangements, you'll be able to use the CE marking, which is the current EU one, until the 1st of January in most cases. But as I say, the CE marking is only valid in Great Britain for areas where GB and EU rules remain the same. There'll be different product marking requirements for Northern Ireland as well. There's a new UK NI product marking that they'll be introducing as well for Northern Ireland. And I just wanted to finish off by covering just some of the upcoming webinars that we've got. Lillian touched upon the Brexit Clinic we've got on the 25th of January. As I say, this is a really good chance for you to speak to a guest expert around, the particular concerns for your business. And as I say, in this session, you'll be split into breakout rooms and you'll be transferred between the different speakers, so you'll have a chance to speak to each one of them on a different topic. In terms of rules of origin, which I mentioned earlier, the British Chambers of Commerce are running a webinar, later this afternoon, 12:30 till 1:30 p.m. So as I say, please do sign up for it if you feel that could be a benefit to you. Our international trade training team at the Chamber, they run a number of training courses as well to help bring you up to speed with the new arrangement. So upcoming ones, for instance, we've got Introduction to AEO on the 3rd of February, and a further one on Understanding Exporting and Export Documentation on the 16th of February. In terms of additional support, the Growth Hub team have advisors, particularly for SMEs. So if you want to give them a call, they'll be able to provide you advice and support. The numbers on the slide, and the UK government obviously have a lot of information on the gov.uk/transition. You also have a business support helpline for businesses in England, so the numbers on the screen as well. And as Lillian mentioned earlier, there's a number of additional resources on the Chamber website, such as checklists for businesses and briefing papers sort of explaining the new arrangements around Northern Ireland and what's in the deal, etc. So that's it from me. I'll just now hand back over to Lillian for the next speaker.
Brilliant, Dan. Thank you very much for that. That was a very thorough overview of the deal and what it contains. So thank you very much for that. Now I'm going to hand over to Rob from Thirstfields, who is going to talk us through importing and exporting of goods. So Rob, the floor is yours.
Thank you, Lillian. Bear with me. Okay. Yeah, as Lillian mentioned, I'll be talking about sort of practical steps I aim to cover in terms of what you need to do in terms of making sure that you streamline and make your imports and exporting as efficient or as streamlined as possible. Some of the information that I'll talk about has been covered by Dan there, and I will just try to move over. I won't sort of go back over ground that Dan has helpfully covered. But just as a starting point, as we all know, the TCA, the agreements that Dan mentioned, that was completed on the 24th of December. And the idea behind that agreement was to provide frictionless trade between the EU and the UK. But as we are now seeing, it is quite complex. There are a number of compliance issues. And if you are importing and exporting, then you need to follow those. The key selling points of the TCA was that it provides excuse me, it's a tariff-free trade agreement, so that there are no tariffs paid on goods that are being traded. However, the goods that you either export or import will be still subject to customs duty. So a key point to note, or one of the things to look at as a starting point, is what's the difference between a tariff and a customs duty? Essentially, both of them are designed to have the same impact. They're designed to protect domestic producers. Looking at them as separately, tariffs, they are a non-transferable direct tax imposed directly by the government, and they, as I mentioned, they're not applicable under the TCA. Custom duties, they are an indirect tax and they are payable under the TCA. If you want to make a further sort of difference between the two of them, if you look at tariffs, similar to income tax, if you like, and custom duties more akin to VAT. The customs duties, they are going to be charged now as a percentage on the value of the goods that you either import or that you export. And there is an online tool that the government have put in place that will help you calculate the amount that you pay. It's not an across-the-board amount because it differs depending on the particular goods, and the collection at the moment is being done by delivery services, and then they will pay it directly to the government. Moving on now, looking specifically at exports, and again, what I'm looking to do is to just take you through the basic steps that you need to do in order to make sure that your exports go as smoothly as they can. The starting point, if you are going to be, and this applies as well if you're importing goods, you need what's known as an economic operator registration and identification number, an EORI. The EORI, that is the registration that you need in order to be able to export or import goods from the EU into the UK and vice versa. You can get one of these numbers, this registration, via an online tool that the government's put in place. In order to do so, for businesses, you need your VAT number. So you need to be VAT registered. If you're a sole trader, you need your national insurance number. And for both, you also need your UTR, unique transaction reference number. The second point, again, this is for your exports, is checking your commodity codes. So all products now that you're exporting to the EU will be each goods will have a different classification. So if you take it as an example, footwear has, I think it's a 6 or 7 digit commodity code. Then there are subcodes to that as well. So if your footwear are leather footwear goods, there'll be another subcode that you need to again add to the form that you're sending when you're sending your goods off to market. Again, more subcodes for the different types of footwear, using that as an example. It's really important that you get the commodity code correct, because if you don't, it's possible that at the point of export, the goods will be held up. You'll pay, if it's an import, you'll pay the wrong duty. So it's key that you make sure you've got the correct code. Again, the different codes can be found online on the trade, tariff and lookup tool, sorry. The next thing we look at is certification. I know rules of origin, Dan mentioned, I'll briefly touch on those as well. So certification, again, I think Dan mentioned this, you need this if you're importing or exporting certain products, for example, plants, animal products, food, medicine, textiles. There's quite a list. So make sure that you do check to make sure that your goods that you are exporting meet the standards required in order to be able to gain entry to the EU market. If it is, for example, plants or food or animal products, there's an inspection regime. So you need to find out where the inspection point is before, again, you send your goods for export, to make sure that you've got the correct certification. Rules of origin, as Dan mentioned, the idea or the principle behind that is to stop the UK and the EU, because it goes both ways, from buying in goods, say, for example, from China or the US, repackaging them and then sending them directly out into the market. Again, the idea behind it is to make sure that labour standards, hygiene standards, etc., are maintained. So you need to prove if you are importing goods, carrying out certain work on them and then exporting them again, you need to follow the rules of origin procedures that are in place. And then you've got generally there's reference to a 40% rule. So if you're making, say, for example, shoes, and 40% of the product is imported from China, which is a third country, as long as you're adding a further 60% from the UK and then exporting, then you should be able to meet the requirements. But again, that varies product by product. So again, you need to make sure that you are complying with the correct rules of origin. On the slide there, it makes reference to Percy Pigs, and some of you may have heard about the issues that have been surrounding that product. That's Marks & Spencer's sweets. Some of you, I guess a lot of you guys will know what they are. I think a lot of us only found out recently they're manufactured in Germany, shipped to the UK, and then Marks & Spencer shipped them out to various countries in the EU. This is something I think that has been has come about. That again, it's something that was missed in the TCA itself, because here you have goods that are being brought in, the Percy Pigs, made within an EU country, and then we're being shipped out. But because in this country there's no manufacturing process involved, we don't do anything to the Percy Pigs before we send them out again, it doesn't meet the rules of origin requirements. And you've probably seen that because of that, Marks & Spencer has decided it's just not worth trying to sell them on to third country or selling them back to the EU. And that's something I think with many of these deals, such as the TCA, it's like we think it's all over, but it's not. They're going to have to go back and revisit certain parts, and that would be one of them. That anomaly where you get goods that are produced in the EU, brought to the UK, either packaged but not manufactured, and then shipped back to the EU. The next step in the process, should come up here, is product labelling. Again, similar to the issue I mentioned before in terms of commodity codes, product labelling is something you need to get right to make sure that you avoid delays at borders. We're dealing now with the EU as we're a third country, and so each of those countries that you're sending your product to will also be treated as a separate country. Each one, again, has different standards in terms of how their goods should be packaged and how they should be labelled. So you can no longer just stamp EU on the box. So if you're shipping goods to Spain or to Germany or to France, you need to check individually which requirements each country has for their product labelling, what language they use, for example. If you don't, again, when your goods get to the border, they could be sent back. Next, VAT, and I'm glad we've got Jill from Prime talking about VAT after me, because from what I've looked at, it does seem rather complicated. One thing I've seen, as I understand it, is that on exports, however, if you're VAT registered, you can zero rate your exports, but the key there is making sure that you keep all your records. Finally, on exports, customs agents, it is, I've just been through five steps there, and I've been looking at the online advice. It's there. It takes a bit of getting through, so it's not the most straightforward of procedures. And if you're looking to get into your markets quickly, you can use customs agents who will take you through the process. Unfortunately, at the moment, the government, the aim was to have, at the point when the agreement was put in place, 50,000 customs agents. At the moment, they're around 10,000. So if you need to get your goods to the market quickly, you need to start looking, and you're going to use a customs agent rather than do this process yourself. You need to start looking now and make sure that you find one who can work with you. Next step, just covering quickly again on imports. And again, some of this will be similar to the exports. Starting point, you need that number, that EORI number. Without that, again, as I say, you won't be able to import. Secondly, registration. Again, depending on what you are importing, you need to do, or you need to comply with specific registration requirements, particularly if you're importing food, plant or animal products. Third step, export declarations. Again, for step one, when you are importing, you need to make sure that the business who are sending you the goods does have the correct license, so their paperwork is correct for exporting on their side into the UK. Then we've got the export or the import declaration, export declaration that you need to make. This is the confirmation that you paid the correct amount of duty on the goods. So that will need, the form that you need to fill in there needs to contain information on where the goods came from and where the goods are going to, what the goods are and the amount of goods that you're importing, the transportation method, and then what's known as the DUCR, which is the Declaration Unique Consignment Reference. Step 4, on your inspection. Again, some of this again seems to be like duplication, but again, if you're bringing livestock or plants in, it needs to be inspected before it can actually come to your the place where you need it, to your business. Again, going back on this relating to exports as well, if you are exporting, for example, livestock, you do need to make sure that the goods have the correct certification, which in some instances can only be provided by a vet. So you do need to make sure that you're making the right connections to make sure that you're not subject to delays when either importing or exporting your goods. The next thing, step 5, the declarations that you need to make again when you are importing goods. There's a procedure to follow, and something known as CPCs, customs procedure. You need to notify the authorities, HMRC, of the customs procedure code that you are using. This is your reason for importing and exporting, and that is provided to HMRC, or it's expressed as a 7-digit code, again, for each product or for what you're bringing in. So example, if it was a component for a car, that will have its own 7-digit code. So you need to make sure that you're using the correct code. The import declaration, that can be done online. Again, it's providing details of the goods, the code that you're using, saying what the goods are and what they're going to be used for. And again, it can be done, as I say, electronically, but you need to register for that service. And then finally, making sure that you paid the correct duty. Again, this can be done online. There's a tool there called the Revenue Online Service, ROS. And if you go to the link called Customs and Excise Payment Option, that should take you through the steps that you need to go through to make sure that you paid the correct duty. That's about it on imports and exports. One final point that I didn't want to mention there as well in terms of your exports. because one of the areas that people are seeing delays. Not many exporters are of the size of scale, for example, of Marks and Spencer, so they'll be putting their goods together with other suppliers who are sending goods to market. It's making sure, or almost checking and asking the courier to see what other goods they're taking, because if your goods are in a van that's been transported along with other goods, what is being found to be happening is that if someone else's goods are stopped, just because yours are in the same consignment, they may be stopped as well. Okay. Thank you, Lillian.
Thanks, Rob. Thank you for that detailed presentation. I'm now going to hand over to Jill Yates, who's Head of VAT at Prime Accountants, local Solihull Chamber patrons. She'll talk us through the Brexit implications on VAT. So, Jill, if you're ready,
okay, yeah.
over to you.
Okay, thank you, Lillian. I'm very aware that you've had an awful lot of information that you've been busily trying to absorb over the next 40 minutes. So I'm going to, over the last 40 minutes rather. So I'm going to keep this absolutely as simple as I can. I'm not trying to cover everything that there is to do with VAT and the changes to Brexit, because quite frankly, we need a lot longer to do that. So I've picked out a couple of things that I think might be helpful. And we'll go through those. So if we go to the content slide, yeah, as you see, trying to keep it very simple. What's gone, what's now arrived, and completing VAT returns. Just go through a few points for each of those three things. So if we move on to the what's gone slide, yeah. Acquisitions and dispatches. People like me who are technicians in the VAT area, we've always, since we've been in the single market, been using simple words like acquisition and dispatch to mean very specific things, which is the purchasing of goods from Europe in the case of, or EU rather, in the case of acquisitions, and for dispatches that meant removing goods from the UK to the remainder of the EU. Now we can start to use those words like normal people do. So I feel quite grateful that I've got two words back that I can use in a normal way. As been mentioned earlier, those two definitions do not exist for the UK in terms of VAT speak from the 1st of January this year. Just one note, and I'll come on to this again slightly later. For people whose VAT returns have got months of 2020 in them, that they're still to submit. So people who've got a VAT return that ends at the end of January, the end of February, you still will have to deal with the acquisitions and dispatches as per the old rules on those VAT returns for those months. The new rules are only going to come in place for months beginning from the 1st of January of this year. I'm not sure that's been made terribly clear in a lot of the publications of stuff I've seen, but it's worth you knowing. People who've had to complete EC sales list will be delighted that they no longer have to. So that's a nice little bonus. And interest stats for exports. There has been a little bit of confusion over this, I think. Interest stats are still required, interest stat forms are still required for those who've had to complete them up to now for imports for the remainder of this year. I think it's going to be a question of watch this space to see if the government wants to continue to do that after this year. But certainly for this year, they have to be completed. But for exports, they're not required anymore. So that's one little job that somebody doesn't have to do, but they're now going to be spending that time dealing with the remainder of the customs requirements. So not a huge amount of bonus time there. The distance selling regimes, as it has existed with regard to selling for UK vendors to EU private customers, doesn't exist anymore in the same way. And there will be consequences of that, as we will see later. And the mini one-stop shop that existed for the UK companies who sold digital or digitized supplies to private individuals, so things like phones, phones, SIM cards, potentially stuff like that. That has now gone because we're not a member of the EU anymore. There is a similar sort of regime that replaces it, but that will require a business to have to register in one of the EU countries. But the old one-stop shop, that went as of the beginning of this year. So having looked at what's been binned, we'll now move on to what we've now got as a new present. Postponed accounting for imports. This is the biggest deal, and I'll be doing this, a minute or so on this after this slide. The reason it's a big deal is, although it has come in because of Brexit, because of hundreds of thousands of businesses who've never had to pay import VAT before, because they've only bought things from outside of the UK from the EU, it applies to everything that is imported. So the main benefit is if you've been bringing in goods from Canada or Turkey or Thailand or anywhere that's been outside of the EU, up until now, you've had to pay import VAT, and you've had to actually hand that over and pay it and then wait to reclaim it on your VAT return. That's not going to be the case anymore for goods that you've bought this year. So from months from January onwards, you will be accounting for this on your VAT return. And we'll discuss that a little more on the next slide. But that's a really good piece of news for people who have always been importing into the UK. It's a nice little bonus for them. Not so helpful is the possible requirement to register for VAT in another EU country. This is because, as has been discussed earlier, there are lots of new rules now with regard to how UK goods are being treated in EU countries. And a lot of people's customers will not have been used to having to deal with customs requirements from their UK suppliers, and they don't really want to have to do that. They're not interested in acquiring the extra costs of doing that. So that's one reason why people might want to register. Another one is if you are supplying to EU private individuals, you're pretty much going to find that impossible to do in a cost-effective way without registering for VAT in an EU country. It is quite an extra lot of work to have to do. So having depressed you thoroughly, let's go back to the nice bit, which is the postponed accounting for VAT, which is the next slide. Right. The good thing is you don't have to apply for it. Nothing to fill in to get this. There are some circumstances when it must be used, which is generally when people have gone for what's called the simplified customs procedures, which means you've decided not to do your customs entries in full for the next 6 months. I don't think most people will be going for that, because in all honesty, you've pretty much got to do half the work now and then do quite a lot more in 6 months' time if you go for postponed customs accounting. So in my opinion, my personal opinion, it's better to just take the hit now and do the full customs procedures now. Although has been mentioned earlier, they are quite complicated. If people can possibly run to taking on customs advice and getting a customs agent, I would recommend that. Filling in these forms is not a simple process, although you are able to do it for yourselves. The postponed VAT accounting is something which you will now be doing on your VAT return. If you've dealt with any reverse charge procedures, and if I'm talking Dutch to you, you haven't, but if you, sorry for the Dutch reference, Lillian, it wasn't personal, but if I am talking a different language to you, then you probably haven't been doing reverse charge procedures. But what it basically means is, instead of paying VAT on goods that said the net value was £100, you would have been charged import VAT of 20 on that. Instead of having to actually physically pay that, what you will now do is account for that within your output tax box. So effectively, you're charging yourself £20. But on the same VAT return, you're entitled to recover that in your input VAT box. So for most people who can recover all of their VAT, it's a paper transaction. You're just putting it in two different places on the return, one as a payment to HMRC and the other reclaiming it from them. Most people are thinking, why on earth do we have to do that if I get the whole of the amount of that back? It wouldn't be the first time people have thought that, but it's there because not everybody can recover all of their VAT. So say, for instance, you were a bank. Most banks can't recover very much VAT at all, normally in single digits. They would be delighted to go and buy all their stuff from another country outside of the UK and not have to pay VAT if they could get away with it because they can't recover it. So this sort of thing exists so that they are paid the VAT as in the outputs box, as I've described, and then they, sorry, my auntie was just telling me she's arrived to help with my mum, apologies. They would pay the VAT as output VAT, as I've just described, but then they wouldn't be able to recover all of the input VAT as their input tax. And that's why this procedure exists. So it's not tempting for people who can't recover all of their VAT to just go and get a non-UK supplier and get a cheaper product that way. I've put the link to more information on this because I think it's probably one of the more important things for people to do who are VAT registered. It explains how you're going to complete your VAT return, but also within there's a further link to click on as to how you're going to account for how you work out how much VAT you've got to recover. And that's by obtaining the postponed VAT report. Because let's face it, there just isn't enough admin to all of this. We need a little bit more. So you obtain a postponed VAT report. But if you go onto the website that I put at the bottom, there is another further link to click there to take you through to obtaining one. I would recommend you ask for that as soon as possible, so that if there are any glitches, you can have them all lined out by the time that you'll need this, which will be into next month, because that report will be for all of your imports for the January, your first one. And you'll be getting that probably, I would think, about mid-February if everything goes to plan and the government websites all work correctly. I'm not in charge of that. I think I've said everything that I think is quite useful. If you've got any questions, unfortunately, I won't be able to hang around for the questions and answer sessions, but please put them and I'll get back to you and do my very best to help you. So thank you very much.
Lovely, Jill. Thank you very much for joining us. As Jill's mentioned, if you've got any questions for her, do put them in the Q&A and we'll make sure that we get them over to Jill after this session. I'm going to move on swiftly because I'm conscious of time. So thank you again, Jill. And I'm now going to hand over to Dave Harris from our international team, who is going to talk about carnets and temporary movement of goods. So Dave, over to you.
Thanks, Lillian. Morning, everyone. I'm aware that my subject is fairly dry and pretty technical, so I won't dive very deep into it. I'll just give sort of the lightest of touches. I have no slides, so I hope everybody can see me. Obviously, we're all aware that we've left the customs union. That means you cannot freely move product around in the EU as you could before. So what do we mean by the temporary export of goods? So let me give you a practical example. If you were going out to, say, a conference in Brussels and you were flying out with your laptop, you don't need anything because the customs officer will consider that a personal item and you'll freely move through customs. But if you were flying out to the same event, but you were perhaps performing a seminar and you were taking out 12 laptops and a printer and a microphone, customs will expect to see some temporary import paperwork. Now, the carnet system exists to make temporary exports easier. You don't have to use the carnet system. All countries operate a temporary import procedure, which fundamentally is a bond lodged with overseas customs and an import and export declaration done. It sounds easy, but it's complex. That bond may be lodged with overseas customs for a considerable amount of time after you've come back from your visit, and you'll almost certainly have to employ the services of an agent overseas to do the import declaration. So the carnet system exists to make your life easier. So what is a carnet? A carnet is a passport for the goods. So you can use a carnet for three conventions. So the first convention is what we call commercial samples. So if you were taking out samples to show to a prospective customer in Germany, Spain, France, wherever, perhaps at their premises or at a hotel, you'll need a carnet. We're then into what we call exhibitions and trade fairs, which speak for themselves. So if you're going out to a spring fair somewhere or a major exhibition, again, you'll need a carnet. And the third category is what we call professional equipment. So we issue a lot of carnets here to cameramen. So if you think of a cameraman going out to film a documentary for the BBC and he's taking out his camera, lenses, batteries, he'll need a carnet. So if I give you an example of how it works. So at the moment, in fact, today I've spent since 7 o'clock this morning almost constantly on the phone to people asking about taking competition vehicles out to events in Europe. So if I give you an example of what would happen and what we already know is happening with customs officers in Calais. So if you wanted to take out a classic sports car to an event in Germany, if that vehicle was unroad registered and you put it on a trailer, towed it down to Dover and drove into Calais, without paperwork, the French customs will turn you away. And we are aware of some incidences that have happened already where private individuals have rocked up at Calais with classic cars for events and they've been sent straight back to the UK. So the carnet acts, as I say, as a passport for the goods. And it's effectively a sheet of counterfoils that are stamped by customs along the journey. So you'd present yourself and your item, whatever it would be, to customs. And in our example at Dover, UK customs would stamp you out. When you got off the ferry in Calais, you'd present yourself to French customs. They would stamp you in, and you're then free, obviously, to move throughout Europe, or rather the EU. And then when you finished your journey, you'd return back to the last exit point from the EU. So you get your document stamped out of the EU at Calais and then stamped back into the UK, and you've completed the circuit then. To give you some practical examples, as I say, at the moment, the phones are ringing off the hook here at Chamber House with queries about temporary movements. I've had a chap whose entire business model is a puppet theatre that he takes around Europe, giving shows to children at schools. He's done this for decades, and suddenly he's aware that he won't be able to move his kit without a carnet. I've had the British Gliding Association on the phone this morning. They've got 6,000 members who take gliders towed behind four-wheel drives out to events in Europe. They potentially will need carnets. Took a phone call yesterday from a company who are sending an engineer out to install a piece of equipment. I think it's a turbine. It's a generating plants somewhere in Poland, I believe. He's taking a toolkit out. He will not be able to get a large professional toolkit through EU customs without paperwork. So the carnet system exists to make all temporary movements simple. As I say, it's not mandatory, but the alternative is too horrible to even contemplate. So anybody that wants to take any goods out to the EU on a temporary basis, please get in touch and we'll discuss whether you need one, because there are a few exemptions, and we can give you ideas of how much these documents costs. But they're very unique, and I can't really give sort of blanket ideas of costs, because there are limitations depending on what you're doing, whether you're renting goods to somebody, whether you're just showing at a, as I say, as a trade fair. So yeah, anybody that's, you know, this affects, please get in touch, and I'll go into greater detail. So thanks for your time, and over to you, Lynn.
Lovely, Dave. Thank you very much for that. I think when Dave mentioned it to me, certainly something I hadn't thought about how that would work. So I think that's been very useful. So I hope all our delegates agree. We're getting close to 12 o'clock. We have overrun a little bit. However, I haven't seen any questions appear in the Q&A. So I don't know whether that is because everyone's been really thorough, or because everyone's thinking, oh my God, I have too many questions and I don't know where to start. So if you do have any questions after today's session, please do feel free to email me, and I will happily reach out to any of our speakers to get those answered for you. Today's session is recorded, and we will also follow up tomorrow with an email, including some of the slides of our speakers. So again, if you have any questions, do feel free to reach out after the session. A huge thank you to everyone on the panel who joined us today for giving up your time and sharing your expertise. And also thank you very much for everyone who attended today to listen in. I hope it's been useful. It's getting close to 12 o'clock, so I am going to, I think one question has just come in regarding carnets. I've heard of an alternative process called duplicate lists.
Yes,
Dave?
I mean, yeah, so the duplicate list system is the alternative. So not just for the EU, as I say, all countries operate a temporary import system, and put in its simplest form, you're correct. You would take a duplicate list and you would present yourself to customs. The problem then is that customs authority is going to expect a form completed, potentially in another language. You may have to employ the services of a customs agent to complete that for you. And then, as I say, you need to lodge a bond, which is refundable. Now, how much is that bond, and in what form will they take it? Well, that's not easy to find out. Certainly for other countries, I imagine the EU may accept a credit card transfer. But if I give you some examples of how long it can take to get that money back, so you may only be in the EU or whatever country you're going to for a week. I've heard stories of it taking 6 months to a year for your bond to be refunded to you. So yeah, as I said earlier, it's not a mandatory requirement to use a carnet. It just makes life easier. The alternative is very difficult. Yeah, I've got all sorts of stories I could tell, but yeah, obviously, you know, it's in my interest to sell you a carnet, but I think we're very honest with people, and if I think you can get the goods through without paying for one, I will say so. But yeah, dual lists frighten me.
Brilliant. Thanks, Dave. I think hopefully that's answered James's question. No further ones have come in, so I am going to wrap up. Again, thank you very much to our panel for joining us today, and to our attendees for joining us today as well. Have a great Tuesday. Take care. Bye-bye.